Hello guys, welcome to the Trading Parrot, and as I mentioned yesterday in this video, we are now on the 4th day of the daily breakdown. So in this video, I'm gonna analyze 3 scenarios, 2 bullish and 1 that is bearish. Of course, the bearish is the continuation of the breakdown. Where should we find that support for a potential long entry and profit taking from our short? And then there's 2 bullish scenarios that I'm gonna analyze. The first one is the revenge rally into resistance on the daily. That one surprisingly could by itself now bring a new all-time high. And the third scenario is gonna be the most bullish one, which you're gonna be surprised how high can Bitcoin can get if we manage to get this one to play out, which currently is the most interesting scenario. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Thanks so much for all the views. Yesterday we got 2.9k views in the daily video and tons of likes. If you continue to hit the like and write out comments as soon as the video gets started, that sends the signal to YouTube to show this channel to other people. Remember to have a look at the link in the description. My 2bit exchange, my campaign is currently offering $50 for free just by signing up into a new account. That's even prior to depositing anything. It's non-KYC. And if you start depositing and trading as well, you can claim up to 30,000 in bonuses. There's support for over 1,000 trading pairs, leverage, multiple languages, and everything. And it does support the channel as well. So me and the person that is going to edit this video is gonna really appreciate it. Ethereum cost basis distribution heatmap shows profit taken from buyers around 2.5k. After all, we have already moved 1.3k to the upside without any stop, visible in the fading red band from around July 1. So what happened in July 1st? But they still hold nearly 2 million Ethereum. Takeaways: number 1, strategic profit taking. Number 2, expecting more upside. Number 3, new demand is absorbing the supply because we haven't had any decent correction yet. And I'm gonna show you the SOPR chart later and the reasons behind why I'm taking some profits on Ethereum around here. I mentioned that yesterday in the video. So far, taking profits around 3.8k has been good. I'm not expecting the price to stop moving up, but this follows my strategy of DCAing out into the pump. If we get a correction, I might rebuy that Ethereum. There is a way to spot when there is an impulsive move that is gonna stop. Sometimes we see these moves like this and people don't understand what's going on behind the curtains. That is typically the combination of a liquidation. These were longs that got liquidated, and people tend to use those liquidations to enter new positions. There's also the market force close that causes a reverse in the direction of the price. But at the same time, if you pay attention as well, in the lower area of the chart, we got this component which is called the slippage max, which is basically doing that. It's measuring how much slippage there is during the event of the price moving down. And when it peaks at very high levels, that means that the market orders are being placed but actually are being filled at a decent percentage of deviation compared to where they were placed. That is usually signaling that there might be a reversal. And we just had one at 116. So my thinking today is whether this event is sufficient or if there is still some additional liquidation levels below the price that could repeat this event but slightly from a lower price, or if we are done and we could start reclaiming the lost support on the daily and using the 4-hour breakout that is still intact today to carry on going to the upside. But before we go too deep into the waka waka area of the video, let's talk a little bit human language in here, and let's cover 2 bullish news and 1 bearish to see what kind of sentiment we can smell from the market. We got Trump Media and Tech Group buys $2 billion in Bitcoin for its treasury. A single corporate treasury purchase removing 16k BTC from circulating supply, that's 2 billion, signals rising institutional conviction and creates immediate buy-side pressure. We got as well Wells pulling 600 million in BTC off exchanges while Binance retail selling spikes. That's a 7 out of 10. Large holder withdrawals hint at accumulation and reduced sell-side liquidity, offsetting retail profit taking and supporting price resilience. In regards to the buy from Trump in here, it's a very interesting one because we are very close to all-time highs, and seeing these institutions buying like crazy makes me want to think, are they really timing that good these entries? Because in the bear market, we didn't see any of this. And I keep thinking, well, if this is the market of institutions, just like retail market was in 2021 in that cycle, is this gonna be the cycle where the institutions get completely wrecked? Could that go in the history books as, well, finally we have the institutions and finally we have them to get wrecked in the bear market? Just a thought. Number 2 is actually a bearish news. We got in here the US spot Bitcoin ETFs see 131 million net outflow, ending a 12-day inflow streak. And yeah, although the amount is pretty insignificant if we compare this with what we have had of inflows in 12 days in a row, we have days with over 1,000, multiple days with 500, 700, 400, and now we have a very insignificant outflow of 131. By the way, this does not include BlackRock, where we can see there was no movement yesterday. I guess this is not necessarily like a red warning signal, but it's always interesting to see where they kind of slow down, and people think whether this could start increasing in the slowdown. I guess that is the biggest fear. The last time that there was an outflow, that was on the 1st of July, so it's been very intense. Price is still moving within a squeeze, we could say, in the 1 hour, in the 4 hour and lower time frames. Our closest CME gap is here between 113.7 to around 115.300. Almost a 2K wide CME gap located below the price that could attract the price eventually, overlapping with some fair value gaps that are pretty fat around the same range. We can see also that the symmetrical squeeze triangle has been broken, and we are currently approaching it as a resistance, right? So we lost it in here, we reclaimed, but we couldn't cross this level. Then we lost it with a lower low relative to these 3 lows in here, and we are now approaching 118 as a resistance. So that is an area of slight concern if this pattern is still valid. Of course, you could argue that the pattern is not really that we have actually a bullish pattern in here in formation that could be a falling wedge, a bull flag. Therefore, we haven't even touched that support, and we could continue into this area, not even necessarily needing to use the fair value gap and still break out to the upside. Just trying to be on both sides to not get any bias really blurring my head. It is bearish to have this fair value gap in here. It is bearish to be below 118, but we need to discuss what needs to happen really for the bullish case. Remember, we have 2 bullish scenarios that I want to cover in today's video. In terms of the Bitcoin status, nothing has really changed. We still have that global support on the 4 hour. We have reclaimed. It's been a very noisy breakout on the 4 hour. Those are the things contributing at the moment to keep this in the gray, because we do have a breakout, but it's been very noisy with loads of levels lost to the downside with fake outs. The CPR is also holding by a thread that level of resistance turn into support. We might lose that support if we continue to underperform around that range. On the daily, we also have a breakdown that is on the 4th day to the downside. That's why we started early to flip from green into gray. I forgot to write in here breakdown as well. And we could say that this is a poor breakout at the moment, poor quality. Now, let's discuss the bullish and the bearish case. If you look at the 4 hour, you can see this is a breakout, right? And we have higher highs. Now we have a high, a lower low in here. So it continues to be all over the place. What this is telling us is that this is a breakout, but is so noisy that we need to step back or go up 1 level in the time frame to see the bigger picture and to clear this noise. But let's stay for a little bit more on the 4 hour, because we need to understand where is the support and what needs to happen for this to pick a direction. Of course, the support is 44. That continues to be the support, and in the price that is located at 117k at the moment. That is the line of support in here, and we are still respecting it. Since we put a lower low in here, now what we need to do is to put a higher high to cancel the effect of that. That means going beyond 57.97 on the RSI 4 hour. That means that the price needs to take the previous highest close, which is 119.3. That is the white line in here coming from the RSI resistance. The resistance of, let's say, breaking above this horizontal line with the RSI. Doing that, and we can bring back the 83 top of the range, which is currently located at 133.4. Notice as well that despite the fact that we are putting lower lows in here, let's always remember that we have not yet taken out the past week low, which is 115.7. So our range is starting to widen up, and we need to go further beyond out to really give a clear signal, because every attempt that we are currently doing is just part of being in a ranging period within the squeeze and not yet giving the actual valid signal to exit the range. Notice as well how on the 4 hour we are putting lower lows. Every single attempt at the moment is being rejected, and we could say this is our current resistance on the price. On the CPR, you can see that things are not as clean as before. We have the CPR resistance as a resistance at 117.6. We cross this, we put a new all-time high, and we turn it into strong support up until 19th of July. It is this daily candle that breaks that, puts that as a resistance, and as we speak, we are trying to reclaim it. But now we have kind of broken the picture, right? Because we are no longer respecting that level religiously. We are kind of reclaiming it from below, and that makes that support a little bit less respectable, we could say. Next support on the CPR is 112.3, and next resistance is at 124.788. Keep that number 125 in mind, because once now we go into the daily time frame, we're going to discuss how we could get there with the first bullish case that we're going to discuss today. That first case comes from this. We've been 1 day in the breakdown daily, 2 days, 3 days, that's 21st of July, today is 22nd, and we are so far in the breakout area of this line. We could say that yesterday we broke out, but not very clear. I feel like yesterday we closed at resistance. So today we have the opportunity for this to confirm and do a revenge rally, okay, into 71.19 with a potential rejection after. That's a revenge rally, that's the definition of that. Or this daily could reverse back below this resistance and close like this. That is our bearish case. Our bullish case is to hit that. That's the first moderate bullish case. If we actually reclaim the orange line, that's where we put on the table that 85. And that gives us the mind-blowing bullish case, the scenario number 3. So bearish, moderate, bullish, and fully bearish. Let's see and let's try to break down how it can work this. So let's focus on the bullish case, because we are now in territory of breakout, so I guess it's feasible to get into 71. It's an intra-candle argument at the moment, so not very strong, because during the day we can go back below the white line and turn it into a confirmed resistance, a pivot that points to the downside. So where is the orange resistance? The orange resistance is at the moment at 121.1. That means that the price on the daily needs to go there into 121 to complete that revenge rally. So let's say we go into here in a couple of days, and then we see that rejection to the downside. That will put a higher close on the daily, and assuming we are in scenario number 1, we could reject and come back down. We could do that with a wick, right? And that week can get even into 125k. Why not? Around there, we have the epicenter of the liquidity pool number 2. And we have already done that sort of modus operandi, right? We do a week into 23, we get a rejection. Then we do another week into 125, we get another rejection with a daily close that gets pushed back below the orange line. Then we are confirming that we are back below the orange line. We move intra-candle into these levels in here just to take that liquidity, grab it, and come back below 71. and then with a rejection back down. Why am I leaning towards the end like that? Because this has lost 4 days below support. So the statistics, okay, not the certainty, because there's no certainty, say that the most likely scenario if we get into 71 is a rejection, okay? 60-70%, not 100%. Let's go into the sweetest, less likely scenario, but the most bullish one, okay? Banana zone if you want. We reclaim 71. We don't get rejected there, right? Assume we go into level number 2 and we defend it strongly, okay? There is no distribution in 2, or there is, but there is bullish absorption. For that, we need a daily close above 121, and we need to defend that daily close. It could be in 1, 2, or 3 days, but we need to stick around 120, 121 and keep pushing until we manage to reclaim the orange line. Once we do that, we increase significantly the chances that we extend that move into 85 RSI, and at that point we meet with 136. So you get into 121, you defend that level, and you get an additional 15K of additional move up to consider. Now, why is that low likely? Because we tend to fake to the downside and manage to reclaim when we do it quicker. 1 to 2 days, 1 to 2 candles. In here, we broke down, adjusting this, and we've been already 3 to 4 days below the orange line. So that tells us that we have lost a little bit of momentum, and now we need to do a heroic effort really to get into 71. And if we get there and if we cross it, potentially we just do it intra-candle and we end up being still with a close below 71. Now, the bearish case is if today we saw a lot of selling pressure for some reason I ignore, and we reject the white line and we leave the pivot below 63 RSI. I've got that level here. You can see it on the right hand side. At the moment, that white level is 117.587. So all we need to do for the bearish case is to have a close below 117, more or less 600, and then we produce a pivot following the red line to the downside. And that calls out for going into 42 RSI on the daily, or even 25, obviously more likely just to get into the PNR level, which is what we've been before, and then we'll see what happens if we really can get into 42. That level 42 at the moment is the previous month high, is 110,455. We got the anchor VWAP to the previous all-time high now showing at 109. We have the top of the previous range at 108. So around that area of 110, 109, 108 is the support of failing with this bull flag. It is a bull flag on the daily, guys, and a bull flag is meant to continue to the upside. So we have that argument, but we have 4 days of a daily breakdown. So we need to start, balancing out the odds at the moment. So if you want me to pick a side, I already did. I am already in a short from these levels. If we get into 125 or if we get into 136, depending how we get there, I'm gonna have to decide whether I want to add to my short at those levels or not. If you missed the video yesterday, I mentioned that this week at these levels, if we don't start breaking out to the upside, we're gonna complete a bear cross on the weekly time frame. If we do that, I'm gonna be forced to also change the weekly to gray. Notice that at these prices, leverage squeeze, the 3 consecutive signals that we have one that is currently in profit, one that is break even, and one that is at a loss. So we could say that the combination of the 3 are at the moment at a break even. The Bitcoin SOPR oscillator is more lean now towards people taking a little bit of losses. And I suspect some people that enter over 120 have been closing their positions at a loss, and that is something actually bullish. But with Ethereum, I'm getting now a signal in here that says that we just pinched the first band of the percentile of the SOPR. That's a lot of waka waka, but what it means is that basically there's been a significant amount of profit taking in the green around the area of 3.8K, which is something that I joined that party. I sold a little bit of my Ethereum at those prices, And if we carry on into the golden pocket, anywhere between 3.6 to 4.6, I'm gonna continue in my distribution. On Bitcoin, there was some profit taken at those top levels, but now the SOPR has cooled down into the middle line. If we saw it coming back into the green in here, that will be basically an area of capitulation where people are selling a lot at a loss, and that signals a local bottom, similarly to what we saw in this area in here in March. And the futures longs shorts liquidation dominance is showing us now that we are at the lowest level in the whole cycle of accumulated short liquidations. We have just printed a level of minus 26.3. That is way more than the short liquidations that we have in February in 2023. That's the beginning of the bull market. And at that point, the oscillator with a 30-day rolling window gave us a reading of 23.8. So that's 3 points beyond that level. So that's definitely been an area of loads of shorts liquidations coming from futures. Looking at the short-term liquidation pools, we can see a comparison between what we have on the top versus what we have on the low end. Remember that longer-term liquidity pools, definitely number 2, 125 wins, but at the moment that means a move of 8K to the upside. So we have to go into the lower end and see what it means to move just to take those buckets of short-term liquidity pools. A move up to around 121, that means 3.5K move up, a 3% up, liquidates that bucket. But I'm leaning towards thinking that now the short-term liquidity is a little bit bigger on the lower end, which makes it very interesting. We have slightly more liquidity on the lower end, starting from 2.6K. In here it starts from 2.9, so slightly closer to the price at the moment, and a decent spread into 4.2K below the price, into 113.8. I will say that we are still in the triangle, give or take, despite the fact that there is a little bit of deviations on both ends at the moment. So I wouldn't call it yet, as well the squeeze has already ended. At least on the 15 minutes, this looks like this. If we look at the 4 hour, it looks more like we have already exited, but you can see that so far we are doing an attempt to re-enter, so maybe the triangle is already invalid on the 4 hour. Looking at the liquidation map of the past 30 days, we can see that 115.7 is the largest pool in the short term. Closer to the price, if we go beyond that, we can find 107 still is the king. Let's go to book map, and I will say that there is a decent amount now of selling pressure right above the price. This spreads all the way from where we are, which is 118 into 120. They've been moving down the liquidity. They move it from 120 into 119.3, kind of trying to keep the price below that resistance, but the support that we still have at 115 is still there. And this extremes of slippage with the liquidations that we have of longs yesterday was produced around here, very close to that heavy support. So far the CVD, the aggressive traders, are leaned towards the shorts with 6K. And the order book on fire charts is showing us that there is a decent amount of resistance above the price. That's 120, and the next level is 125. We can also see that the purple wells are currently pointing up. So they are at the moment in charge of trying to get back inside the triangle and bring back the bullish case. On Market Monkey Terminal, we can see all that selling wall located in here, peaking at 120, and then 125 definitely is pretty big. 115 continues to be our lifesaver support so far. Today is 2.43. CVD continues to decline in this area. That means that little by little, as we go lower, the longs, the aggressive market buyers are stepping back and the market sellers are stepping in more aggressively. Something that has changed as well substantially today, at least at these hours in the morning, is the distribution of all those limit orders. You can see two black holes in here with a percentile of 0. That is the 10 and the 5% deviation below the price versus above the price. That ratio is very lean towards a rug pull. They have removed liquidity from 10 and 5. That is really interesting. And the purple whales are buying the dip. So sometimes that can happen, not necessarily because it's a rug pull. Sometimes they get so bullish that they take the liquidity that is away from the price and they move it very close to the price. So let's see if that's the case. If they are that bullish, we should be seeing very black away from the price, 5 and 10. Look at the left hand side, and we should be seeing the percentiles that are closer to the price getting very light, getting into the 100 percentile. At the moment, they are at 40 and at 37. So we have a very thin order book in terms of support. What's going on in here? We get the purple whales that tend to know what's going on and they tend to do the right thing. They are betting on the move up. But watch out, because they might be betting, but they are very good at scalping and swing trading. As you can see in here, they were very aggressively buying this move into 123. But you can also see how quickly they rug pull from that trade. They profit take in just a matter of hours, and there is a complete flip into being short. As you can see, their CVD came back down as soon as they reach 123. They're done, job done, let's go home with the profits. And the rest of the cohorts, particularly this green one, was left buying the red bag, right? You can see 1 to 10K, they are now in pain and they were forced probably to close at a loss. Now we can see both of them entering in a long. So my question is the purple gonna rug pull at some point and at what level? And if they do, what's going to happen with that support that at the moment is very thin? I change a little bit the look and feel of my bid versus ask. I always keep the center of attention into 0 to 5%. That is always going to be the case. You can see that it's in red. So we have a minus 0.05. That means that there is less orders between 0 to 5% than there was in all this range before. All the way in here, they were defending the price. At support, they seem to not be doing that much of that. And what I mean by support, I mean this support. This support in here on the 4 hour. You can see we have this line. They came right there at 116. That's confluence of horizontal support with ascending two trend lines. Support from this white line and support from this yellow line on the 4 hour that comes all the way from April, touching every single level as resistance in here. And now we meet with that at the cross of three lines at 116. So now we are pushing now into resistance coming from this level and we're getting very little support. Interesting. Where is that support being removed? On the 0 to 1? Yeah, there's been a decline. There's been decline 1 to 2. There's been a clear decline after defending so much 2 to 5. Now we are in the red, and 5 to 10 as well. 10 to 20 and 20 to infinite, all different deviations of the price at the moment have removed the support. Just interesting. We have currently 160K delta putting the shorts at a higher risk. It's not a huge amount, but maybe just enough for those purple whales to find a local top where they actually liquidate these people and then they can rug pull, or they can decide to go for the two bullish scenarios that I mentioned. If they get it really right and they reclaim on the daily that 71, well, they can benefit from a long swing into 136. It's just very high risk because there is no support. So if they are doing that, they are doing it by knowing something, because the order book is really not saying buy, it's actually saying sell. Let's quickly look at the general markets, how things are looking. This is a close from yesterday. Gold continues to stay in the area of the potential weekly breakout from here. You can see it here on the RSI is pinching that line, and we need to close by Sunday like this to really confirm it. I think all we need is this sort of green candle. We don't need that much. We don't need to break the highest close on a weekly basis for gold to confirm it. Of course, it will be great to put a new all-time high. That will seal the deal. And remember that people being bullish on gold is because they are expecting something to affect in some way general markets. Having that contradictory signal of gold wanting to look for a new high, and at the same time having general markets putting new all-time highs, one of them needs to step back and admit being wrong. So far the Nasdaq still rolling over new highs, but definitely slowing down in the momentum. The same goes for the S&P. As of now we have a pre-market slightly below that 628.77, we could say around 1 point below at the time I'm recording. And yesterday the altcoin season reached a peak of 59 and today we're getting 55. Of course, there is a little bit of retracement going on. That retracement is affecting very little the stable coin dominance over the total free dominance. You can see in here that we are still in the area of the breakdown into our target of 19. We're kind of halfway through towards the first target for the altcoin season, if it's to be here for longer. Dominance is currently finding support in the previous resistance, that is the support of 60%, and starting the week with a green candle in here. That could be an indication of what I was speaking about earlier in my updates on altcoins. Pretty much every day I'm giving updates on this, which is after the breakdown, we need now a confirmation of the actual breakdown with a rejection in here and not a rally back into the top of the range, because that's definitely gonna hurt. If we reclaim this, ideally we see a rejection shortly after. Let's just stay around this bubble and let's continue on our way down in the momentum applied to the dominance. That is gonna stay bullish for altcoins. And Total 3 has done a magnificent move into 66 at the moment. We were talking about an initial target of 70, so we have done already a lot of progress in here. Not yet enough to do a global breakout into the next target of 90. Indeed, our resistance, I will say now, is at 72. So let's drop this from 73. So let's say we meet with 72. That will bring Total 3 into 1.2 trillion. And Ethereum, after an impressive increase in the dominance into almost 12%, now is starting to decline this week on the early candle. What we want, of course, is a retest or maintain a bull flag in here for continuation into way higher levels of Ethereum dominance. That is kind of a healthy metric for this altcoin season that we are. We don't want the Ethereum dominance to decline too sharply, because that can really jeopardize the whole altcoin season. Remember guys that on my Telegram, the link is in the description. If you scroll down on any post there, you can click on TTP charts. By doing so, you get live access to all my charts. And this includes all coins, general markets, and all the Bitcoin charts that we discuss in the videos. You can magnify them, request multiple for free. You get up to 2 charts, but join with your friends and check how many charts you want. And if you want to contribute to this project to keep it alive, you can help funding it by buying a subscription 3, 6, 12 months. At that point, you get unlimited access to all the charts. Notice that is only the TradingView ones for now. Thanks so much for watching. I'll see you in the next one. Take care. Bye bye.